Hey guys, how you guys doing? Vincent Loo here, back at it again. And if you guys follow my Twitter, I'm talking about liquidation, short squeeze, and liquidity heat map. And if you ever didn't understand what's that, watch this video to the very end to understand what is liquidations, liquidity, heat maps, liquidations, short squeeze, long squeeze, all these terms that you need to know in order to understand what's happening on the chart right now, as you guys see here. So watch this video to the end. So as you guys can see over here, I have my Coinglass. You guys can link in description below if you want to access Coinglass. In Coinglass, you can actually put out this indicator called liquidation. So aggregated liquidation, if you press this, you come up with how much liquidations, meaning there are traders who lost millions. Okay, some amount of traders lost millions because they got liquidated in the future market. Okay, their whole capital got liquidated. They give it to the exchange, and exchange will give it, sell it off, and so on and so forth. If you guys really want to know how it works, okay, you must understand how does future trading actually works behind the scenes. So let me go through a little bit on my Twitter about what I said. So if you guys can see, the price goes out all the way out, and you guys can see there are a lot of liquidations over here. I said millions liquidated, 5 million 2 times. The market pumped 2 times, hitting all the liquidations, meaning a lot of people are shorting, and when the price goes up, they lost their capital. Right, another post over here, we have Coinglass. So Coinglass have tweeted as well, and they posted in the liquidity heat maps. Okay, in the liquidity heat maps, there are a lot of liquidation upside. Okay, if you guys were to zoom in, it's at 68k, and my post was after that. So when it reached 68k, all this liquidity got liquidated. Right, that's what happens over, at the Bitcoin price actions. So if you were to look at the liquidity heat map, also link in description, I will share with you guys. You guys can actually see the liquidity, right? So everybody's shorting or longing right now. And if you were to click on 48, look at all this red, the yellow color zone, as everybody's shorting the market at 69k. Okay, over here, everybody's longing it. When the price goes down, everybody got liquidated at 67k. So if you were to go to Bitcoin Superchart, right, 67k over here, right, all the longs are liquidated. You can see that. So how many millions are here? Okay, over here is 10 million, close to 10 million. So millions and millions of money got liquidated just like that. Okay, where all the money goes, how does it actually works? So we will jump right into it and see what's happening behind the scene. So if you were to, for example, open a short entry in the future market, okay, you buy the contract and you ask Bybit, hey, I want to open a short entry worth 100 USD. So basically, Bybit will sell their Bitcoin, right? Bybit have a lot of Bitcoin. Okay, Bybit will sell their Bitcoin, okay, and get 100 USD. Okay, can you guys see that? Still, Bitcoin will sell first, okay? And if you were to gain in profit, okay, gain in profit. So how do you gain in profit when you short the market? Meaning the price would goes down. So Bybit were to sell and get 100 in their account, okay, and when you TP, Bybit will buy back the Bitcoin at a cheaper price because the price already goes down. So the difference will go back to your account, right? That's what Bybit does. Okay, that's what exchange does. Exchange will never lose money, right? Exchange will never lose money. They'll earn based on transaction fees. Basically, everything buy and sell is from your hand, okay, from your money. Okay, that's what they do. Okay, that's how you gain 10 ringgit. If Bitcoin price was to go to 90, let's say you did not put any leverage 1 for easy understanding. Short TP, you sell the Bitcoin, right? You take TP, you short the Bitcoin from 100 to 90, but you gain 10 USD. Okay, so how about short liquidation or stop loss? How about when you lost? Okay, you shorten the market actually goes up. So if the market were to goes up, okay, market were to goes up, Bybit will take 10 USD from your account, okay, and buy back the Bitcoin. Okay, you get what I mean? So for a short entry, Bitcoin will sell first, right? It will sell and hold cash position. Okay, Bybit will hold cash position over here. They sell that Bitcoin on their hand, and then if you liquidate it, means the price would goes up. Price would goes up. Bybit will need additional fund to buy back the Bitcoin. That's why they'll take money from your account. That's why you got stop loss, liquidator, liquidation, right? That's what happens behind the scenes. Okay, so during liquidation, you're forced to buy back. Okay, you're forced to buy back. So when the price goes up, hitting all the liquidations, okay, again over here, for example, hit a lot of liquidations. That's why you see a long wick upwards, because a lot of people are forced to buy back, causing market inefficiencies. Okay, causing market inefficiencies as is market buy, right? Market buy, Bybit or any exchange you are using uses your money to market buy because you've got liquidated market buy all the Bitcoin, hence the price spike upwards and pushes back down. Okay, because market inefficiency, market aggressive buy, right? And then the smart money will aggressive sell at the top. So that's what happens during liquidations. You guys get what I mean? Okay, if you guys really understand, comment in the comment section below. How about long entry? How about long entry? Long entry is the same. Okay, you want a long. Okay, when you want a long, Bitcoin will right use the money to buy Bitcoin. Okay, they will buy Bitcoin. Okay, if let's say I want a long 100 USD, they use the money to buy Bitcoin. And if the price would goes up, so you take TP, but we will sell the Bitcoin, getting additional money because previously I buy at 100, now I sell it, I get 110. The difference will go to you, but you actually earn profit. Okay, to sell Bitcoin. So how about liquidation? Again, they also need to sell Bitcoin. Okay, liquidation, they sell Bitcoin but at a cheaper price. So they'll use the money in your account again, your capital, but your stop loss or your liquidations to buy back the Bitcoin. Okay, that's what Bybit does. Bybit would, and any other exchange will never lose money. But they will never lose money. They only earns your transaction fees. Okay, so if you were to look at long entry, stop hitting liquidations, they're forced to sell. Okay, they're forced to sell. That's why during all the long liquidation, I aggregate the liquidations over here in my Coinglass. The long liquidations causing all the spike downwards because everybody was forced to sell their capital. They're forced to use their money. Bybit will use their money in their account because they got liquidated and sell, right? Aggressive selling. So that's what happens here, guys. That's why there's a pretty huge wicks to the bottom side. So if you guys always see liquidation always accompanies with wicks, okay, whether it's long wicks or short wicks, there are always wicks because of liquidation. And fun facts, liquidations is where the smart money entry or exit. Okay, that's where the smart money enter or exit. So people can actually use this to as an indicator to know what smart money is doing. Okay, over here again, smart money exit the trade over here. Smart money buys in, and over here, smart money buys in. Let's look at that. All the long wicks pushing the price upwards. So I hope you guys understand more, okay, about all of this. Again, the heatmap liquidity by Coinglass yet again. So Coinglass also have the heatmap liquidity, so you guys can know where all the stop loss and liquidation, right, all the prices. So if you guys know when price were to hit all these liquidations, there'll be a long squeeze, right? This is a long squeeze. Over here is short squeeze, right? Squeeze forced to buy back, goes up. Long squeeze forced to sell when it goes down. That's where market inefficiencies happen, and that's where the smart money changes hand. So hope you guys really understand, and let's see from the weekly. Okay, On a weekly, we still have 1 day and 23 hours to go. Right now, we are still green at the MEXC crossing above the zero line. Very bullish momentum for the Bitcoin. And right now, we are still not breaking out yet. Okay, still not breaking out yet. Hope in the future, October, then November, that's where the bull run starts and closing across this trend line, breaking upwards. Okay, so this is the future training for liquidation. I hope you guys finally understand. And when you guys see, okay, my post in Twitter, I follow my Twitter link in the description. When I say short liquidations, liquidity, you guys knows what I'm saying. Okay, so liquidity, these are all liquidity. Okay, liquidity, because when it hits, right, when it hits the liquidity, okay, liquidation happens, the money will spike up, right, all the price change. And these places are called magnets. Okay, if you see a lot of liquidity, the price tends to move towards that liquidity, right? You guys want to know why? Because if the smart money pushes the price to the liquidity, okay, then everybody will be forced to buy and forced to sell. Because of liquidations, they can buy at a cheaper price or sell at a more expensive price. Get what I mean? So for example, over here, if the price was to go up, okay, and all the short squeeze forced to buy it back, so the smart money can sell it at a higher price. That's why there's always wicks. Why there's always wicks over here. Okay, they're forced to buy at a higher price. The smart money can sell at a more expensive price. That's why there's always wicks, guys. Hope you guys finally understand what I'm talking about, and I'll see you in the next video. In this video, I hope you guys finally understand about liquidations.